John Higgins, Mortgage One. Happy Monday. So we've talked about volatility in the market, and there's this thing called a black swan event. So things that are not predictable having a huge impact on the stock market, the interest rate environment, and our mortgage rates. As you can see what's happening in the Middle East over this weekend, it's really put quite a bit of volatility into the marketplace. As of the open of the market at 9:30 this morning, we saw the S&P and the Dow Jones down a full %. We've seen oil up nearly 8%. And this VIX item, that's the market volatility index, that's up 18%. So showing that, the market is really having a hard time digesting what's going on with our efforts against Iran right now. But coming out of last week, we did see some great news. All of the major news organizations, including CNBC, the Wall Street Journal, New York Times, and many others, were touting the fact that we finally broke below 6%, really the lowest rates we've seen in the last 4 years. Affordability has been a huge issue, and with interest rates breaking down here heading into the spring selling season, really sets up 2026 as going to be a great year. The issues over the weekend certainly have put a bit of a damper on this news, but I still think that affordability is going to be much better in 2026. Where does that leave us with regard to the 10-year Treasury? Well, we did break nicely below 4% on Friday, coming off some economic news that the market liked. We actually got almost all the way down to 3.9%. So that was great news heading into the weekend, but things have changed and changed quickly. As of early this morning, we're up nearly 7 basis points. And as I cut this video, I think we're up over 10 basis points now. We're going to have to see how the market's going to digest this news, what's happening in the Middle East. Keep your eye peeled to that for sure. As I mentioned, Freddie Mac posted on Thursday, a little backward looking, that we did break nicely below 6%. So best rates in 4 years, affordability is getting better for our buyers, no doubt about that. What's coming up? Well, we've got some manufacturing and services information, the PMI and the ISM numbers. We've got employment numbers. Those are usually market movers. So at the end of the week, we get the U.S. employment number. That's the big number almost every month. That's the most impactful number that we're going to see, and watch for that at 8:30 in the morning on Friday. I do want to point out a couple tools and some programs that we have. I really believe that 2026 is going to be a great year, and I'd love to help make that the most successful year you've had over the last couple. We have a free marketing program called Move To. We're going to get your listings on TV. We offer done-for-you video trailers, audio tours, digital property cards. We have an awesome open house app to capture your visitors' name, email address, and phone number, and so much more. We also offer a prospecting tool, our mobile ProSap app, that helps you get your buyers pre-approved. You share that co-branded app with them, and you can track the progress right from the initial prospect meet on the phone or in person, all the way through closing and beyond. And I also wanted to bring out a number of interesting programs. We have lots of tools to put into your toolbox to get those buyers from a prospect all the way to a client and to closing. So Fannie Mae has a home buyer grant up to $2,500 that they offer. MSHDA with its $10,000 down payment assistance program. We have a very interesting program for investors, our DSCR, debt service coverage ratio mortgage, allowing an investor to qualify solely on the cash flow coming from the property and not their income. When you're talking to clients and you don't think that their credit score is quite going to make it, remember we do offer low down payment programs to 580 on their credit score. And then for those buyers that have been looking out there for a while and they can't seem to find a home that they really like, but maybe they run across a property that fits the floor plan they're looking for exactly in the area, but needs a little bit of help, some TLC. We do offer not only the FHA 203K, which I think everybody knows, but Fannie Mae has a home style renovation program offering a lot more flexibility in what they can do, including bumping out the house, maybe building up. It's a great program for someone that loves the area, loves the house, but the condition or maybe some of the amenities need to be upgraded and they just don't have the funds. We'd love to help you out on any and all of these. Give me a call with any questions. truly believe that 2026 is going to be a great year, and I'd love to make it happen for you. Give me a call anytime, and we'll talk to you soon.